The selling continues and the question is, how low will we go from here? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was down 0.51%. And I have to sit here and laugh because now the bulls are getting mad at me because last night's title said more selling, and the bulls are starting to think I'm getting too bearish and I'm trying to make retail miss this rally. And if you go back to the beginning of the year, that's the exact same thing the bears were telling me when I was bullish, and they were telling me we were going to much lower prices. And a lot of the bears said SQQs to the moon, and now those bears have suddenly disappeared from my channel. And I think I understand why when I look at a chart of the SQQs year to date and I see that we're only down a cool 65%. So you got to keep emotions out of this game and you have to listen to the chart. And the only reason I'm saying that we're likely getting more selling is because it's being broadcasted on the chart and we were just way too overextended outside that daily Bollinger Band. Now, there's other reasons why I think the selling was coming, and we nailed the short trades on the Stocks Channel Discord server, but you have to remember nothing moves in straight lines up or down, and even though this is still a bull trend, there's always going to be corrections and pullbacks along the way. So check your bias at the door and leave the emotions out of it. And yes, we were expecting a pullback, and yes, that's exactly what we got, and it's just a matter of how low are we going before we go any higher. I say go any higher because yes, this is a bull trend, so even if we get a pullback back to where I think we're going, which is the breakout at 430, I still think there's a good chance we resume this bull trend to higher prices. Now, just because I think we're going to 430 before we see the next higher high doesn't mean I'm correct. We could easily put a higher low into a higher price like 433, for example. And it's also possible we don't bounce off 430 and we go straight down to close the gap at 423. This is the definition of letting the price action do all the talking and not having a bias, because I couldn't care less which scenario plays out. I'm going to let the price action guide me, and I'm going to trade what the price gives me from these critical risk levels. So on SPY, your critical risk level is still down here at 430 if you're bullish, and if you're bearish, you can manage your risk from that pivot up there at 442. Now, there's really only a few scenarios from here because we're either going lower towards 430 or we're going to immediately start bouncing and try to put in a higher high or a lower high, which is going to be that gap fill right around 439 and the previous resistance between 441 and 442. So for example, if we bounce and we put in a lower high, that's going to open up the door for a lower low, and that could set a downtrend, or it could be the end of a correction or a pullback before we continue to higher prices. All of these scenarios are possible, and that's why each and every day we follow price action. And we usually do that on the Stocks Channel Discord using smaller time frames. That way we can actually take advantage of any intraday price action movements. But on this daily chart, we have the bull trend, and we are looking for the possibility of a higher low before the next higher high, unless we start breaking the support trend line and break this critical support at 430. So 430 is a very critical level. Whether you're long or short, you need to be aware of the importance of SPY 430, because from there we could continue to higher prices. And if we break below it, we're likely going to lower prices. So that's the line in the sand in the critical risk level. Whether you're long or short, you need to be aware of that level. On the NASDAQ 100 triple Qs, we were down 1.36% today, and we finally got the breakdown below the 5 EMA, which is now negatively sloping, and we're coming into this support zone between 355 and 360. And just like SPY, I think there's the possibility that is our higher low before we continue to higher prices. Now, if we break down below 355, that's telling us that something else is happening, and then we'll be looking for critical support right down here, right around 347. And if we break 347, we do get that full-blown correction that likely takes us to 337 and then the gap fill at 333. So know these scenarios, and the critical risk level is going to be whether or not we can hold above 355. If we bounce off 355, all is well and we're continuing the bull trend. And if we break below 355, look out for that correction that could bring us down into the 330s. The only thing that tells us which one's going to play out is the price action, and leave your guessing and your bias out of it, because the market couldn't care less what you think and the market couldn't care less what I think. If we start to bounce, we need to break back over 371 to continue to those higher prices. But as I've said before, and I'll continue to repeat, I think we need to go lower and cool down before we go any higher. So don't forget about the possibility of continuing lower towards that breakout at 355 and at least getting a test of the breakout before we continue any higher. On the Dow Jones, we were down 0.3% today, and the Dow Jones is continuing lower, and we did break below yesterday's low. But as long as we're above 336, we still have the bull trend, but that doesn't mean we can't go down and test that breakout at 336 before going any higher. So as you can tell, all of the indices have the same exact story, and they're all saying we could go a little bit lower before we hit critical support. So I wouldn't rule out the possibility we need to go a little bit lower before we test critical support. We have bull trends, so we're not getting extremely bearish, even though we did short some of these tops and capture those profits. This isn't really the time to continue to short as we're approaching critical support. Manage your risk very tightly right around 336 and that resistance zone right around 341. On the Russell 2000 IWM ETF, we were down 0.23% today, and as you can tell, the Russell is looking a lot weaker today because we're breaking down below the bull flag, which is that breakdown below 185, and we did close below a negatively sloping 5 EMA yet again with a tall wick above the candle, which tells us there was a lot of sellers above that resistance. Now the danger in IWM is if we break down below this zone between support of 184 to 185, we're likely coming all the way back down to 180 in a hurry and possibly even the gap fill at 176. So I wouldn't be getting overly bullish in IWM until we can break bullishly out of this range, which is going to be the break above 188. And if you want, you can stay bullish as long as we're above 184. It's completely up to you. On the ARKK ETF, we were down 3.62% today, and we did get high volume selling, even though high volume is relative to the last couple of days, but we did get a very bearish candle and a rejection from that resistance at 44.5. We broke down through support at 43, so that leaves the door open for support at 42, and then down here at the breakout at 40.5. And just like the indices, if we come down to 40.5 and we bounce, all is still well, and we still have a bull trend, and we're still above the 200 daily moving average, which could just be another higher low before the next higher high. So you're seeing this theme across a lot of the indices and a lot of the sectors. So if we continue higher, we still have bull trends, and there's no harm, no foul. On the VIX, we were down 4.9%, and the VIX is asleep at the wheel and has absolutely no care in sight of whether or not we should see volatility in this market or fear. The VIX below 15 is still what you're going to see in a bull trend, and we need to see the VIX spiking out above 18 to tell us we could be seeing something more than just a pullback. On Bitcoin, we're currently up about 6%, and Bitcoin is getting the second day of high volume buying, and we're blasting through that higher high breakout at 28,000. So we do continue to have the buy signal that we could be breaking out of this downtrend, finishing out this correction, and getting ready to go to higher prices. The next resistance we need to break is 30,500, and the next upside price target is just below 32,000. But I do think if we start breaking above 30,500, we are very likely going straight to 35 to 36,000. So high volume buying on a bull breakout is never something you want to ignore. And if you're bullish on Bitcoin, now's your time to jump using this risk level at the breakout at 28,000. On Amazon stock, we were down 0.76%, and we're still consolidating in this bull flag look between 121 and about 127. So if we get the breakout above 127 to 128, we're instantly bullish for the price targets at 133 to 134. And if we break down below 121, we're looking for that correction that's likely bringing us back down towards 113. On Nvidia stock, we were down 1.74%, but still holding that breakout above the price target at 427. And remember, if we break down below 427, you need to get out because we're likely going to see big selling down to 398. But we have a strong bull trend, and if we hold above 427, we're likely going to 448 next. I still don't think it's time to short this stock because it's still likely going to higher prices. On Tesla stock, we were down 5.46% today, and we have a bearish engulfing candle, and I really think we are due for a pullback, which is likely taking us back down towards the gap fill at 235 and the breakout at 230. Even though I do think we are going to higher prices and we are going to push into the 290s, I think we need to put in a higher low before we go any higher, which means in the short term, we're still looking for more selling in Tesla stock. However, this stock loves to do the impossible, so we can never rule out the fact that it's just going to go straight there. But right now, I would manage your risk right around this breakout zone between 262 and 268, knowing that we're more than likely going down towards 230 to 235. But that is just an idea. You need price action to confirm it, which means we're going to need to break down below 256 next. On Apple stock, we were down 0.57% today, continuing that rejection from 185, and we did bounce just above that support right around 182. If we continue the rejection, we have support at 182, 179, 177, and if we break all of that support, we're likely going through a full correction that's going to take us back down towards 167. On the financials, we were down 0.12%, continuing to see that rejection from the 200 daily moving average, and we're not getting bullish until we can close above there. The industrials were up 0.56% today, bouncing back above all the moving averages with the price action, and we still have the bull trend, so there's no reason we can't continue to climb higher from here. Use the support of the breakout right around 101.5 to 103. On the healthcare sector, we were up 0.02% today, still trying to build a bull trend. The longer we can close above 131, the better, and above 131, we're likely trending towards 134 to 137. The energy sector was up 0.79% today, still getting rejected below all the moving averages as we build up a bear trend, and I still think there's a great chance we're heading lower to fill the gap at 73. So jumping back over to the S&P 500, don't get emotional about the pullback. This is completely normal, completely healthy, and it was actually completely expected because we had just gone way too far, way too fast, and we need to put in a higher low before the next higher high. This is a bull trend until it's not, but in the short term, we're getting a pullback. So respect the short-term downtrend, even though we're in a longer-term uptrend. Don't get bearish for the hell of it. As we're pulling back, you need to get more and more cautious of shorting as we approach support. So if you're still shorting this market, be very cautious doing so as we approach critical support levels. Try to short near resistance for a better risk-reward ratio. And if you're bullish, try to only buy near critical support. That way you have well-defined risk, and you're going to do a lot better if you have well-defined risk. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come check out the Stock Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts, which will send you all of your buy and sell alerts directly via email and text message. Find out how to join the Stock Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.